What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 55. It's August the 28th, 2023. We made some trades today, so let's get into it. First and foremost, let's talk about our important levels that we have today. So today's closing price was 34,380, if I'm not mistaken, but that didn't play too much of a factor at all today, so we don't have to discuss that too much. So let's go ahead and let's get right into it, and let's start talking about these trades. So let's start our analysis over here at 9:30 this morning. So no news came out today, so it's pretty much just an ordinary day. So we see the market open, we have a higher low right here, and then we explode to the upside as the market opens. We pull back, create a tweezer bottom, which also is a swing low, and then from that point forward we have a higher low after that, and then we push higher. Now at this moment, what I like to do when I see long trades, I like to look for potential entries based on either my higher low strategy, where I look for a higher low to come back and act as a level of support, or if that doesn't happen, I look for prices to break past a previous high, and then once they make that new high, I look for them to come back and retest the high that was established before. So that's pretty much the mindset that I had on trade number one, and that's why I drew this level of support, this green line right here at the top of this wick. Now I went long right here, but what I need to remember is I need to remember to let my levels play out first. And that's one of the things I talked about in my video, where I was like, look, some things work and some things don't. This is one of those tactics that's really not recommended, and you can see why. Because even though the trend might be strong, you don't just want to blindly go long at any level of support. You want to make sure that that level is going to hold up. You want to see the reaction that you want, and then you want to go long. And also, just a quick side note, I think if you have a really good weekend where you're studying a whole lot and you make some breakthroughs and you feel like you improved as a trader, don't get so confident that when you come into the market you lose your patience and you start to take trades that might not be the best for you because you're just so excited. I think that's kind of what I got into today when I started this session, and I took that loss on one, and that kind of woke me up a little bit and brought me back to reality. So at trade number two, I went long right here expecting for there to be support down here, but I closed the trade quickly when I saw that support wasn't that strong. Now I like to draw my levels of support based off of the highest low that got established, well, the highest high that got established, which is where this green line comes from. But if it happens to be a long tail candle wick like this candle was, I also like to draw a level of support on the body as well. So I don't have it up here right now, what I did earlier throughout the session. So draw a level of support right here from the close of this candle all the way across, and that's pretty much the level that I look to go long from at trade number two. But when I went long right there, I was like, man, something just doesn't feel right. And what I've been learning is that I got to trust my intuition. So anytime I have a feeling where I feel as though the trade might not go my way, I just get out if I can, and I preferably like to get out with the smallest loss possible, and that's what I was able to do at two. It's not necessarily completely exactly break even, but it's close enough where it's only like 2 or 3 points, so not that bad. Because if I would have stayed in this trade, I would have saw profit for 4 points that lasted for maybe 30 seconds, and then it would have came right back down to stop me out. So good decision right there by getting out of that one. And once we see prices come back down to this lower level of support, we see our higher low get established right here where this first circle is drawn up, and that pretty much led us to this second higher low, well, what I thought was a second higher low over here at trade number three. So let's read the notes right here. So I went long as prices came back to retest the higher low, but what I learned right here is that I need to remember that dojis do not count as higher lows. Now you guys know that I love using that higher low strategy. I love to go long as prices come back to test the level of support that the higher low established, but you always want to make sure that the higher low that you see has a clear and distinct swing point, or a pivot point if you want to call it. So if let's find a good higher low on here. A good higher low, if we skip forward, would be something like trade number 9, where if we start from the bottom of the zone, we push up, right, we come back down, we sell off, but then we form our pivot point right here. After we form our pivot point and establish our swing low, we push up to the upside and then come back, and then we see a full green candle that represents a higher low. So anytime you have a doji represents indecision. So if you have a setup that you're trying to base the entry on based off of candle formations, make sure you avoid those dojis because they are not too kind if you're looking for concrete confirmation. A doji is good if you're looking for indecision in the market because you could trade around that too. But if you're looking for concrete information, don't rely on those dojis. And that's what I learned right there. I had to take a full stop loss on that. But once prices came back and kind of broke down below the level of support right here, I shorted as they came back into the level of resistance right here at trade number 4. So my line of thinking was that since we made this doji and we pushed down, if you look, we came back up to retest that previous low, and then we found resistance up there and we got rejected. Now I assumed that since we got rejected after we already started from the swing high at 1, we had a lower high, then another lower high, and another one. So that's the third one. So I said, okay, on this fourth one, I expect us to come back, retest the breakout past support, and then I expect for that breakout to hold up and be successful. But that just wasn't the case. And pretty much once I saw how strong the uptrend was, I thought about the short that I entered at trade number 4, and I was like, you know what? Let me just get out real quick before I take a full stop loss on that, because if the overall trend is up, one of my videos in the past, I know I talked about it a lot, where I said even if the counter trend pullback looks super strong, if the trend that you're coming out of is very strong, you don't want to fight against that no matter how strong the pullback might look. So once I realized that at trade 4, I got out of it. Now when we come back to trade 5, we actually see a higher low get established right here. So we created our double bottom right here, followed by a higher low. Usually when you see that type of setup, it leads to some type of bullish price action going forward into the immediate future. So I just looked to place my long entry at the support level of the higher low, and once I got that, I took the long trade and took prices back up, just back up to the top of structure right here, and then that's when I got out and I exited. And after that, we kind of see the market just start to fall apart a little bit. And if you notice, this first lower high that we established after this overall move to the upside, once the market opened at 9:30, once we established this first lower high, we never came back to ever retest it or to ever break past it. So anytime you see that, that tells you that more than likely there is some selling pressure in the market, and eventually that'll probably lead to a pretty good down move eventually. Not all the time, but a lot of times when you see it happen that way, it plays out like this. So eventually we see prices get back down to that level of support, and this is where I took trade 6 and trade 7. Now let's read the notes for this. So I went short right here on trade 6 and my break even got hit. The thing was, I didn't respect my break even and I took another loss on trade 7. So when it comes to my break even entries for the trades that I take, if my trade comes back to break even, it usually doesn't serve me too much of a purpose to get right back into that trade immediately. Because if the trade was able to come back to break even, that's pretty much the market telling me like, hey, your position was right, but conditions have changed. So you need to sit back and reevaluate and decide if you really need to get back in this trade or if you want to let it ride and wait for better opportunities a little bit later on. That's what I should have done, but I was like, you know what? I see where the trend is moving. I see what's going on. The downtrend is more pronounced than it was at 4 when I went short. So I feel a little bit more confident going short right here at 7. Now I should have just respected the break even, and I wouldn't have had to take this loss right here at trade 7 when I shorted it again, because if you look at what I did, the overall direction that I was aiming for was correct, but my entry level was definitely not the best price. And when it comes down to it, you really want to short from higher prices. So in a scenario like this, my best bet would have been to short as prices came back to retest this level of resistance that used to be a level of support from a previous higher low, but once we broke back down below it, it became resistance. That's where I want to go short from, and that's something I need to keep on my mind going forward into the future. That's very important, very important. So once prices actually broke past this low from this section that we were at 0.6 and 7, we pulled back to retest these wicks one more time, and that's when I enter. And that's what I should have done originally, because I think that right here when I shorted at 6, I was just a little bit too early, right? And then at trade 7, we talked about that, you know, still too early. But when it comes down to a trade like 8, once you already see that the move has definitely broken past those levels of support, you should pretty much have a clear shot back down to the downside if you're able to short from resistance. Now, I could have shorted right here at the lows of the swing, but I was patient and I waited for prices to come back, retest resistance right here at these wicks, and then I shorted and I took it back down to a level of, well, a previous high that we established in the pre-market. So if you take this higher low, not in the pre-market, but as soon as the market opened. So if you take this higher low right here and follow it all the way up to the extreme at this wick, follow that across, that's exactly where I got out. So after that, we see prices pull all the way back up, retest that same level that I went short from, and then prices continue down all the way into a new zone that we established down here at around 11 o'clock at 34,540. Now we played around in this zone for a good little minute. I tried to place some orders down here, but all of my orders were like one tick or one, maybe two ticks away from getting hit, and I wasn't able to get into those trades. But I was able to be disciplined enough to not chase the market and try and force my issue. I was like, look, I know what I'm looking at, so I know what I'm looking for. And as soon as I see the market give me a signal that I understand and recognize, I'm taking it. So I was patient right here, just let the market play out. I saw a higher low get formed right here towards the bottom of the zone. I boxed it up, stretched my level of support across, and that level actually ended up being very significant. We came back to that level 2 times, found support there each time on each occasion. And on the third time, when we actually bounced off of that level, we created a higher low right here. So we talked about this one from earlier. So once I saw this higher low, I was like, okay, I understand what I'm seeing. We've broken above the zone after creating a double bottom followed by a triple test of the higher low strategy. So, well, really it's a double test because this is the first higher low, right? So it came back and tested it once right here, and then it tested it a second time right here. So we had 2 touches. That validates that level even more, because if they had 2 touches and they moved away from it both times, that's telling you that it's definitely some type of buy-in and some type of demand down there at those levels. So then when you combine that with the fact that we also pushed up and made a higher low after that, that's when you start looking for those long trades. So that's pretty much exactly what I did at 9. I was able to catch the short trade as prices came back to retest the breakout, and then I just took that all the way back up to this little, I guess you could call this profit taking area right here. I thought about taking it all the way back up to the wicks right here, but I never like to take a trade all the way back to a certain level, because if everybody is eyeing that level, more than likely it's going to be some people that's getting out a little bit early in front of that level, and I want to make sure that I'm participating in that as well. So that's why I chose this level right before we get to resistance as the place for me that I want to exit from. So then after that, I guess I got out at the right time, because prices quickly shot all the way back down to the bottom of the zone, but they found support down there once again. So I was patient as prices were trading within the zone. I wasn't really comfortable trading the zone because I didn't know which way in particular it was going to break. I expected it to break to the downside, but because I wasn't quite sure, I decided to skip that trade, and I think I made a good decision by doing that. And after we broke above the zone one more time, that brought us to trade number 10. So let's read the notes real quick. I went long here as prices broke out of the zone, and then I exited once I saw this long tail wick that happened right here on this red candle. So everything in terms of my entry was pretty good. We had a push back down to the bottom of the zone where we established a triple bottom. From that point forward, we broke above the zone, created a higher low, and as we came back to retest that higher low, I'm like, okay, that's where I need to go long. Now I had an opportunity to take profits up here at the top of the zone, but I was like, well, the top of resistance, but I said, you know what, if we've been moving higher and we already had a big swing to the upside on trade 9, I expect that same thing to occur and maybe even move further past where we went on trade number 9. So that was my mindset, and that's the reason I didn't get out right here when I saw that long tail candle wick. But instead I was like, look, if prices come back to break even, I'll get out right there, because anytime you see a long tail candle wick like this, even if you had a higher low that preceded that, you don't really want to go against that long tail candle wick, especially if it closes as a red candle. That's telling you that sellers are in the market and it wasn't enough buyers to actually provide a decent amount of support right there for your trade to work. So it's better to go ahead and get out at break even before things start to get ugly. So that's pretty much the mindset I had right there on trade number 10. So that was part 1. Let's move on to part number 2, and let's talk about trades 11 through 17. So after 10, that was break even. We come back to trade number 11. Now, as you can see, we had a pretty strong move to the downside, right? So I'm expecting for us to pretty much respect this level of resistance, and then I expect for the downtrend to continue. So I shorted here as prices hit resistance, but I closed it quickly once I saw that higher low form. So if you go back to my trades and tactics videos that work and trades and tactics that don't work, one of the main things I talked about was closing all of your short positions as soon as you see a higher low, because the probabilities of your short trade working after a higher low gets established decrease substantially. So once I saw that higher low, I was like, look, let me go ahead and get out. I was able to pretty much get out for break even right here at 11. And if I would have held on, I would have definitely gotten stopped out. So good decision right there to just recognize what the market is doing and hurry up and get out before it's too late. Now, after that move happened, we do see prices continue up. They created higher highs and higher lows the whole way. And I didn't participate right here because I just wasn't quite sure about how long these higher lows would last. But when it comes to higher lows, no matter how you might feel about the downtrend, sometimes you just got to go along with those higher lows, because higher lows are the market's way of telling you that the buyers are very intentional. Because if the buyers were not intentional, they wouldn't come in and buy at these support levels. They would let the sellers step in and take control of the market and do whatever the sellers need to do. But if it's buyers coming in and buying at every higher low that gets established, that lets you know that the market has a lot of demand right now, and the best side of the market to be on is the long side. But because I wasn't quite sure right here, I was just like, you know what, I'll let the market play out and do what it does. And if I see any more setups that are just clearly apparent that I should be taking, then I'll take those. But I wasn't able to see that throughout the whole entire swing all the way back up, and that's okay. You know, I think I showed a lot of discipline and a lot of restraint by not just taking any random long trade within this entire swing. I did a really good job on that. So once we finally pushed up and created the highest price for that swing up here at 34,640, after that we saw lower lows and lower highs all the way down back to what used to be a previous level of resistance that is now acting as support. So once I saw prices bounce off of that one, I was like, okay, we should be coming back to retest what used to be a previous level of resistance right here at this little small green candle. And sometimes you can have the smallest green candle play a major level in the market, and this is actually one of those days where that happened to be true. So at trade 12, I shorted at resistance as prices made multiple lower highs, and then I just got out once prices came back to retest the level of support down here. And the reason I didn't hold on to this one was because I saw this higher low get formed right here, and I was like, okay, that is a higher low, but I see what the overall trend is. Let me make sure that the sellers don't come in and reverse this higher low real quick. And if they aren't able to do that and reverse the higher low, then I'll just get out, because more than likely we'll probably come back up to retest the level of resistance up here at the green line. And that's pretty much exactly what happened. So good decision right there. I was able to lock in my profits, so I'm proud of that. Now when we come back down to 13, right here at this junction, I kind of got a little bit too excited, and I pretty much ran into the same problems that I did on trade 6 and trade 7. Very similar situation on trade 13. So let's read the notes. I shorted right here expecting for resistance to hold, but I was way too early. And whenever I'm too early when it comes to a short move, that really is just a translation that says I need to short from higher prices. That's the solution to that problem anytime you feel like you're too early. If you want to go short, short from higher prices. So looking back on it in retrospect, I was shorting down here from the wicks of this candle, when instead I should have been shorting from the bodies of this candle. So that makes a big difference, shorting from the bodies instead of from the wicks. When the trend is really strong and you feel like it's going to move away from you without too much of a pullback, that's when you want to go short based off of that wick. But a lot of times you'll see prices run past the wick, come back, retest the bodies, push down past the wicks again, come back, retest the wicks one last time, and then that's when you see the downtrend continues. It happens like that a lot. The market will come back and test every single last level of resistance that it can, and when it gets rejected from all of those, that's pretty much when the market is going to break. And that's what we ran into at trade number 14. So at 14, I took the short here as prices were on the way back down through the entry of trade 13. And sometimes when you're shorting the market, that's also a better way to actually find your entries, where you don't want to, I'm not going to say all the time you don't want to short as prices are on their way up, but there will be occasions where prices run through whatever resistance level you were aiming for, but if you catch prices on the way down, you have a much better chance of being successful. So that's what I was thinking at trade 14. And as soon as I saw prices spike back through my entry price from 13, that's when I took the short trade and just took it back down to the bottom of the zone. Now, I considered maybe taking it back down all the way to the lowest portion of the zone, but to me that just didn't make sense because I feel like that would be me trying to be a little bit too greedy. Looking back in retrospect, yeah, it's easy to say, oh, you could have just held that, but in the moment, it made more sense to me to get out at the top level of the zone because we had this level of resistance that had been respected for a good little minute, and we also had this long tail candle wick right here. So I'm like, okay, it was some action going on at this price level before, so it makes sense for me to go ahead and exit and take profits right there. So that was my logic behind trade number 14. So we see the downtrend continue all the way until we finally establish a low. So once you pull back and you establish that first lower high after a big extended move to the downside, you can use that area in conjunction with the swing low that just got created, and you can make a zone. So that's how I created this zone that I had down here, where I took the swing low right here, and then I took the lower high and extended the zone throughout those 2 points and used that as a reference to trade this entire scenario. So on 15, I shorted as prices came back to retest resistance, right? Because if you see it, we had a low-key higher low right here. We pushed back up to the top of the zone, but when we came back down to the bottom, I was like, you know what? We should have some type of, I would say, resistance level that holds up right here because the overall trend is down. And most of the time when you see a spike to the downside like this followed by a consolidation zone, the chances of prices breaking out to the downside increase dramatically. But it doesn't happen like that every time, and today is a good example. Today we actually broke out to the upside instead of seeing continuation to the downside. So at 15, I closed the trade for break even because I wasn't really too sure about this one. One of my rules is that if I ever have to take a trade from in the middle of the zone, it's just better for me to skip that setup, because what I've learned is that trading from the middle of the zone is just unreliable because prices could go either way. If you go short, they could go back to the top, stop you out, and then come back down to the bottom. If you go long from the middle of the zone, prices could come back to the bottom of the zone, stop you out, and then push all the way back up to your original profit target where you could have been profitable if you didn't enter from the middle of the zone. So instead of trying to see what would happen and say, maybe it could work, I just decided, hey, I'm at break even right now. I have an opportunity to get out of a trade that I'm not sure about anymore. So I took advantage of that, and I think that's the right decision to make right there for sure. So then we kind of see prices start to not respect the top of the zone as much as they used to. They came back up and tested the top of the zone 3 times before trade 15, but after trade 15, they were never really able to get back up to that level. So I was like, okay, I'm seeing the signs of a potential zone breakout. So let me just draw my trend line up here. And if prices respect this trend line, I'll look to go short on the last touch as prices are coming back down to the bottom of the zone, looking like they're primed and ready to break out. So that was pretty much my mindset at trade number 16. So I used this. Let me zoom in. Hold on. Okay, so I used this 1 wick as my level of resistance because I figured if this was the last pivot point where prices were able to find demand and push back up to the upside, we should come back up to that point, retest it, and then the sell-off should really continue. The only thing was, I feel where I was coming from when I made that decision, but if the trend line is right up here, it would make more sense to just go short when prices hit the trend line. And that goes back to the idea of shorting from higher prices. This trade number 16 was profitable for a good little minute, and it would have been completely profitable and hit my full profit target if I would have shorted from the trend line and shorted from higher prices. So that's a lesson learned right there. You know, I was able to not get out at break even on 16, but close to break even where I lost like 2 or 3 points. So that's not too bad, but when you look at what it could have been, I feel like I'm leaving a lot on the table by not capitalizing on opportunity when it's there. So that's something I definitely got to clean up when it comes to trade number 16. So after that, after 16, we see prices break above that bear trend line. They break above the zone, come back, create a higher low. Now, usually whenever I see a higher low, I drop my level of support and look to go long as prices come back and retest that. That's my strategy right there every time. But remember, I said I also don't want to participate when we're in the middle of a zone. No matter how appealing the setup might look, I just have to skip those trades no matter what. And even though it was very tempting to go long right here, it would have been a great setup. I was like, you know what? Let's be disciplined. Let's follow our plan. Let's stick to our rules. If we don't trade from the middle of the zone, we won't do it here either. So I'm happy that I was able to have some restraint and follow my rules right here. And then I just waited for the next best opportunity. So I was like, okay, once we respected this level 2 different times, I'm like, okay, that's the market telling us that there is demand at that level. So once we created this higher low, we pushed up and we never really came back to retest it. So whenever you're in a scenario like that where the higher low doesn't get retested, what you want to do is start looking for prices to come back and retest what used to be the previous high. So that level for us is represented by this wick right here when we pushed up and almost touched the bottom of the zone right here, the red zone at the top. So I'm like, okay, if prices come back down to that level, I'm going long and I'm looking to take it back up to the top of the zone. So that's pretty much exactly what I was able to do at 17. I went long here as prices made a new high and then came back to retest the previous high. So took it up to the top of the zone, didn't get out exactly at the top, wanted to get out a little bit early right in front of that level, and was able to do that pretty successfully. So that was trade 17, and that leads us to our last 3 trades of the day, trades 18 through 19. So let's go ahead and break that down real quick and figure out what I learned and what I need to improve on. So for 18, I shorted here as prices came back to retest resistance. Only thing was I didn't consider the multiple touches of support that were made down here below. And that's important because remember, I told you guys about these higher lows, and anytime that higher low support level gets retested multiple times, even when it comes back down a little bit later on in the session, you still don't want to ignore the fact that this was a major level of support. Don't just assume that it's going to break through. And that's pretty much what I was doing right here. And also at 18, I would say this is another example of why you want to make sure you take the first entry and not the second one. Because if I'm not mistaken, the prices for this one candle came back up to 530. I had my order at 531 looking to go short as prices came back to retest that level, and then I just wanted to take it back down to the bottom of the zone. I wasn't able to get that trade, so I kind of tried to chase the market back down, and once we hit the bottom of the zone, I was like, well, if this was the previous level of demand that we saw most recently, that level should act as resistance and I should be able to short from that level. But that just wasn't the case, and I kind of realized that once I took the short trade. I didn't get stopped out for a complete entire stop loss. I stopped it for maybe like 4 or 5 points, so not too bad, but still, you know, those small losses over time, they will add up. So it's just better to not get in that trade at all. But I think I'm on the right track because, you know, a couple years ago I would have took that trade and just held it and said, you know what, if I took the trade, I believe in it. I don't care if the market is giving me conflicting signals, I'm still gonna hold on to it. So the fact that I'm not doing that anymore and that I'm getting out of these trades early as soon as I recognize that what I thought was valid at first is not valid anymore, I think I'm making some pretty good progress, and I want to keep that going. Now the next step on that level of progression is to not even take that trade 18 at all, to see prices come back down to the bottom of the zone and say, okay, if the move started from the upper zone that was above this one and we came back to retest the upper level of the zone below, more than likely we should see some type of profit taking right there. So it should be some demand at that level that pushes prices higher. So in the future, it would just be better for me to not take that trade, and I think that's where I need to improve upon and level up on right there, just avoiding those trades. So overall, I would say I'm definitely on the right path though. And let's see, after that we played around in the zone a little bit. We created a higher low right here, and then we came back to retest it. Now this one I was scared to take it because I saw what could have potentially been a double top right here and right here. So I'm like, even though prices are coming back to retest that higher low that also lines up with the zone, I'm just not quite sure about taking it. So even though that trade did work and it was my setup, I think I made the right decision by skipping that entry right there. So we see prices eventually push all the way back up to this level of what used to be support earlier in the market, at 34,620. That was support from like 10:30, like 10:45 this morning. So that level actually played a major role later on in the session, as we see right here. So we had the long tail candle wick, and then from that point forward, we sold all the way back down. Now at 19, I think I just read the market wrong a little bit right here. So let's read this. Let's read the notes. I shorted the first level of resistance after a large spike to the downside. That right there in and of itself is a great strategy to use. That makes sense. That's logical. But here's the thing. I had a chance to get out at break even after seeing a higher low form, but I didn't execute. And this trade was profitable for a quick little minute, but once I saw the higher low form, I had a chance to get out at break even. And I sat there and I watched it, and I was like, I feel like this trade is definitely gonna go against me, but the fact that the down move was so strong right here just makes me want to hold on to that trade a little bit longer. But that goes back to what I was telling you guys a little bit earlier about higher lows. No matter how strong you think the downtrend might be, when you see that higher low, you get out. You don't ask any questions. You don't hesitate. You just do what you need to before it's too late. And on 19, it ended up being too late, and I had to take the loss on that one. But I definitely learned my lesson from that trade right there on 19. So after 19, we pretty much got into the last couple of minutes of the day. And on 20, man, look, this was just a bad trade. I went long right here based on nothing except for hope. Pretty much, because I was a little bit frustrated from 19. So I dropped my contract size down. I was trading 3 contracts on 19, but I just traded 1 on 20. And I was like, look, if this was the previous high, then prices should come back, retest that, and then come back and hit this level of resistance up here at 620. But that was just not the case. And I pretty much knew that when I took that trade. But I was like, look, I don't care. I'm frustrated. I'm just going to take that trade. And that's not really what you want to do. That's a bad decision to make. Now, luckily, the market closed 15 seconds after I took that trade, so I didn't have an opportunity to keep pushing that issue. But that's not really a decision you want to make during any session, because imagine if you took a revenge trade like that earlier in the session at like 2:30. You still would have had an hour and a half to go where you might have been on tilt and might have been making bad decisions that stemmed from the aftermath of the results that you got from trade 20. So even if it's at the end of the market, don't take a trade just because you want to see what could potentially happen. It's not what you want to do. So that right there, that was trade 20 that wrapped it up for my trading day today. And you know, I dug myself into a hole today, and I pretty much worked myself back out of it. But then 19 and 20 just put me back in the hole again. So I ended up finishing the day in the red. But I feel like I learned a lot of lessons today. I learned that, for one, we'll go back to the first part of our scenario. You don't want to go long at those higher prices, and you don't want to be too excited when the market opens. What I've really been focusing on and learning a lot over these past 2 weeks is that you should actually find pleasure and joy in being able to skip most of the setups that come at you throughout the market all day long, because that's really what it comes down to. How much discipline do you have, and how much restraint do you have to be able to avoid those subpar trades while you're waiting for your best setups to come around? Because when I see my setup starting to form, I do pretty well on those. You know, all of the things I study for and I'm looking for, when I see those, I execute and I do very well. But my only problem is trying to cut out those subpar setups that I'm getting in between my best setups. So that's one of the main things I need to work on too. And let's see. Comes back to 6 and 7. I need to work on being a little bit more patient. Don't be too early when you see the move coming. Make sure you short from the highest prices if you need to. If you want to go long, make sure you go long from the lowest prices. Always remember that. Let's see. What else do I need to improve on? That's pretty much it. I would just say sticking to your rules is the most important thing that I need to do. I think my problem right now is that I'm sticking to the rules, but I'm sticking to my rules like maybe 80 to 85% of the time. Sticking to your rules is something that you need to do 100% of the time. Not 8 out of 10, not 9 out of 10. Every time, 10 out of 10 on every occasion, no matter what the circumstances might be. And if I'm able to do that, I think I can come back tomorrow and be pretty successful and do what I think I should be able to, which is make profit. So I got some things I need to work on tonight, but it's nothing I can't handle. Understanding where you went wrong is half of the battle. The other half is actually going back to correct those. So I'm about to go hop on the simulator right now, get on the back tester and practice this, come back as a better trader tomorrow, and I'll be back on August 29th, somewhere between 9:30 and 9:40. I didn't have a live session this morning. My Wi-Fi was kind of messing up, so I had to cut it off short. But tomorrow, more than likely, I will have a live session. So make sure you guys tune in and tap in. But until that time, you guys, study hard and take it easy.